About an hour ago, we had a $1,200 drop on Bitcoin, but we also had a pretty impressive recovery. Now, is the dip over and is this all we're going to get? Or is this just the start of a longer correction? Those are the questions we're going to be answering in this video. Go ahead and like and subscribe. Welcome to RTBro's Trading Academy, where we focus entirely on the charts. We completely ignore the news because it can be manipulated, and we also ignore the fundamentals because it cannot be quantitatively valued. So, this is the price chart on Bitcoin, and these are two levels of liquidity that would be prime areas for whales to use to try to fill some of their bids to the upside, right? Because if you're a whale and you have all of, you want to buy a ton of Bitcoin, if you just go out there and instantly buy that Bitcoin, it's going to shoot the price way too high. So instead, what you do is you intentionally make the price drop down, get people to sell their coins, in which case you scoop up those coins that they are selling to you because they are scared of the market. This is called a swing failure pattern. And it looks like that may be what we actually have gotten on Bitcoin. So this level of liquidity has now been swept along with this one. The only other levels of liquidity that we have is way down here, and with the strong reaction that we've received so far, I'm not entirely sure that we're gonna get this far down, guys. This looks like a very, very strong candle, right? Um, Now, the yearly open is right below, and yearly opens are very significant. And the fact that we were able to get above here is a very bullish sign. And just to give you an idea of how important yearly breakers are, I have listed the yearly breakers for the last 2 years on this chart. So we're going to go to the 12-month chart, and you can see we have one right here at around 47,000 for 2022 yearly open. This is a 2021 yearly open at 28,000, and the 2020 yearly open is right out here at $7,200. Let's look at the absolute incredible significance of these levels. Now, in a 2021 yearly open, it happened right here, and as you can see, we tapped it and then we swept it, and then we continue to the upside. The 2021 yearly open was the key level that actually held us up during the bottoms back in January of 2021 as well as June of 2021. So yes, the yearly open acted as a very strong support back in 2021. Now let's go back to 2020 and see how significant that was. As you can see, this was the yearly open right here. We rose up from it. We fell through it. And once we fell through, as you can see, we had a ton of conviction because losing a yearly open is very significant. We had a very massive drop with a ton of volume, right? But we were over here consolidating, 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 kept pushing up. However, the ultimate sign to the market that we were going to continue going up was getting back above that 2020 yearly open. And once we did, we never looked back. All right. So, yes, the yearly opens are very significant levels. And the fact that we are trading above the yearly open is a very bullish sign, and it should not be it should not be understated. All right. So, as long as we're above the yearly open, this does not look bad. It really, really doesn't, guys. All right. So, ultimately, this is the level that I'm looking for a confirmation that that the bottom is actually in. This is a 12-hour breaker that was formed a couple days ago. Um, and we pushed down below it. We tested it one time already. We pushed down below it, and now we're currently trading back above that 12-hour breaker. All right. And this is the cleanest level that I can find on the chart that really makes it very, very clear for us. Okay. The problem is that the 12-hour breaker doesn't close for another 9 hours. And unfortunately, if we are disciplined traders, like I hope you are, you really need to wait until you get more confirmation that the bottom is in. And this is the best confirmation. So as long as we stay inside or above this level, this would be a very, very strong candle. This is called a bullish hammer candle. And also, this would confirm that this was acted as a strong support level. So ultimately, this does look really good right now, but it's still way too early to actually tell. But that is essentially what I'm looking for. All right. Now, if we lose that level and we also lose the yearly open, where are we going to fall to? I think the very obvious level is going to be right down here at the weekly breaker. So if we lose the yearly open, if we do not confirm that 12-hour breaker to be a support level, I think it is very likely that we're going to come back down to the weekly breaker. And the weekly breaker is going to act as a very strong support level because it acted as such a strong resistance level for so long over the last few weeks. Look at this: test, 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 right? So we tested it all these times. We busted above it. We now have it as support. So I think that if we're able to come down here and retest this weekly breaker, to me, this is an instant buy zone, and I will absolutely be reinvesting a lot of the capital that I took out a few days ago. All right. Like I told you guys, I was bearish on Bitcoin in the last video, and the reason why is because the volume was not very impressive. The DXY did not look good, as well as the longs positions were decreasing by a lot. So because of all those reasons, I was expecting us to have some sort of a dip. And as you guys can see, I wanted to see a bearish divergence form because we were right around here, right? Now, in order to have a bearish divergence form, you're going to need to make a higher high, and you're also going to make a lower high on RSI and on volume. I was looking for on both the volume and the RSI. Well, as you guys can see, we had a large spike of volume here. However, when we made the next high, the volume was not nearly as high. So this is a bearish divergence on volume. And just like with the price and the volume, the RSI also made a lower high, which is what you're looking for a bearish divergence. So I did go ahead whenever I got my bearish divergence that was made. I went ahead and I actually did cash out quite a bit of my cryptocurrencies at around this region. So around 47.4 to around 47.8 is where I cash out a majority of the cryptocurrency that I pulled. And it ended up being around 35% that I did pull off the market, right? Now, where am I going to redeploy that? I'm going to redeploy it if I can find it real quick. Either way, I'm going to redeploy it if the altcoin season does take off the way that I talked about in the previous video, or if we get back down to that weekly breaker, or if I am proven to be incorrect and we do just shoot up to the upside. So if we're able to confirm this 12-hour breaker as a solid support level, and in 9 hours, if we're still above this level, I will have to go out there and say, okay, maybe we're not going to go as far down, and I will start to redeploy some of that capital that I pulled at that time, right? Um, the next thing we're talking about is the longs, right? And the longs are a big reason as to why I am bearish on Bitcoin. And these longs continue to drop. And when you see longs dropping like this goes to show you that people are losing confidence in the market on going up. Okay. And these are major players who take out these longs. And so when the whales do not have confidence the market is going to keep going up, that's whenever they close out their longs or just don't open anymore. All right. Now, so the fact that it keeps dropping so aggressively over the last few days is very concerning, right? Just like during this period of time, we were increasing in price. So now we're starting to decrease in price as the longs are starting to close out, or that's what I'm expecting to see. Now, the good news is that the shorts are at an all-time low level, guys. Essentially all-time low. They've been a little bit lower than this, but ultimately, you guys can zoom out and really look at this. The short positions are much, 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 much lower than they were way back here, okay, during the bear market, right? And that makes a lot of sense. So ultimately, although the people who are long in the market or that are they're not longing, which means they don't have much confidence the market's going to keep going up, they're not opening up short positions, which tells me that they also don't have a lot of confidence that the market's going to drop. So ultimately, they're in a neutral sort of territory. They're just waiting for confirmation either direction. Now, if we start seeing a massive increase in shorts, that would be very bearish to me, right? So if there's a lot of short positions that start opening up, that'd be very bearish and a confirmation of my bearish bias. All right. Um, the next thing we're talking about is the Dow Jones. we actually closed very strong today. So we had we're up an entire point today on the Dow. Um, Traditional markets and crypto tend to trend in a generally the same direction. So this is a bullish sign by showing, and we are also now above the 200 moving average, which I think is a very significant thing. So ultimately, the traditional stock markets do look really good, and that also does play a bullish sign to the rest of cryptocurrency as well. Now, the next thing to talk about is the DXY. This was a big reason, again, as to why I'm bearish on Bitcoin, right? Because once we broke out of this consolidation structure, that to me tells me that the the people are still do not have confidence in the traditional markets and cryptocurrency continue to go up. So US dollar is considered a safe haven away from the risk on assets like traditional stocks and also on cryptocurrency. So when this is increasing, that shows a lack in confidence in traditional markets and in crypto. However, as you can see, we reversed and fell right back into this consolidation structure. So red was what I was expecting and is a bearish sign on crypto. But the fact that we fell back in that consolidation structure absolutely gives me a lot of wariness on my position of being bearish in crypto. So if we are to fall beneath this rising trend line, that to me is a very major show of strength to the cryptocurrency market. Okay. So if we can fall below this, back into this consolidate or back into this range or back below this trend line, that would be a very, very bullish sign for crypto market. And I would absolutely start reapplying that capital that I pulled yesterday back into the market as a show of strength. So, next thing to talk about is the total three. Total three has been an absolute, really, really great indicator for the altcoin market. All right. And this level right here is a weekly breaker, and it should have acted as a strong support level because it acted such a strong resistance. Got down back down in here, and it did. It acted as a very strong support, which is very, very good, guys. And this also happened to be the golden pocket retracement. And as you can see, we held the golden pocket very well as well. All right. But this is a weekly breaker, and as of right now, we are rejecting off of it. So this is a little bit concerning. Furthermore, this is the 200 moving average, and again, just like we saw on the other chart, we are also rejecting off the 200 moving average, which again is not a great sign. So we are at a pivotal moment for cryptocurrency. We really need to see what's going to happen here. Now, the last thing we're going to go over on this video is going to be the Bitcoin dominance chart. And I talked about this a lot last video, so really dive in there if you really want to get an idea of everything that all of what this means. But ultimately, we're still ranging, guys. And the more that we test this upper level, the more bearish you have to become on alts because we really want to see this thing curve and start crashing the downside so that money rotates from Bitcoin into altcoins. So the more that we keep hovering up here, especially if we start pushing into this weekly breaker and getting above the 4-hour 200 moving average, that's going to be very bearish for altcoins, potentially bullish for Bitcoin, but definitely bearish for altcoins. All right. So yeah, guys, I think this whole video may ran a little long. It goes over a lot of different things, but I think it's all very important for you guys to understand and really understand the key things that we're talking about here and looking for. So ultimately, this 12-hour breaker needs to hold. Looks really good right now, but we still have more time before it actually confirms. And yeah, outside of that, I'm gonna let you guys go. Oh, one more thing. Make sure you guys join the Discord. I cannot stress it enough. All right. I update this thing all the time, and I also have a Patreon where I update you guys with my crypto plays and my calls and things of that nature. And I think it's a tremendous amount of value for the cost. So, all right. Outside of that, I'll let you guys go. Have a great day. Make sure to like, subscribe to this video, and I will see you guys in the next one. Like always, deuces, boys. I'm out.